there are actually 8 such transactions and 8 such discrepancies that have been picked up during this audit, and they total 733.91 crore rupees. That's one example. So, there are various other such examples, Pankaj, on what has been unearthed.
Right. What is the issue regarding LLPs and dividends? Is it not commensurate with the investments?
Okay, so now what the audit also did was it cross-verified records on a test check basis of 4 shareholders that had more than 1% in Reliance Industries. So when I started doing that, it actually discovered an instance of 350 companies and LLPs that are actually all registered at one address. 350 companies and LLPs registered at just one address, and this we did when it was trying to find out who all had more than a 1% shareholding. So what the CAG believes is that, is there an entire universe of such paper companies that are not known what their income is, and also whether they're regularly filing tax returns or not. So it's actually a maze and a universe of companies out there that is absolutely not known. So that is one of the red flags. So when I was doing this cross-checking, what the CAG also decided to then take out 2 such LLPs, and these are the shareholders having more than a % each. The names are Ajitesh Enterprises and Badri Commercials. What I discovered was that Ajitesh Enterprises in the assessment year 2012 to 13 got a dividend of 102.14 crore rupees, but its investment on the balance sheet for the same period was only 0.09 crore rupees. And in fact, the partner capital was also 0.09 crore rupees. On to Badri Commercial. It got a dividend of 102.14 crore rupees, but its investment in the balance sheet was only 0.11 crore rupees. The CAG believes that if, Badri and Ajitesh had to get the dividends of over 100 crore rupees, you should have actually seen an investment of about 125 crore rupees. It should have been north of 125 crore rupees. And that is why the CAG has red flagged that our investments and partner capital in balance sheets not commensurate with the dividend. And that's when the CAG pulls up the IT department and says that why weren't these discrepancies probed? Why weren't the sources of such investments actually verified? Why is it that when such a large dividend is being involved, there was no scrutiny either? So earlier also when I was talking to you about Reliance Industries and the related party transactions, once again, the CAG pulling up the IT department, then why isn't that the books were cross-verified? And when the books were not cross-verified, why didn't the discrepancy come up? So here also the CAG questioning that, if all of these LLPs and paper companies, etc. exist, how do you know the source of their business income? And if they're getting such large dividends, why aren't they being cross-checked?
There's also some issue with Reliance retail transaction, tax deductions and the order over there.
Okay, so what during this audit, what the CAG notices is that there is a regular feature to merge and demerge group companies, which it believes is actually to reduce tax liability. Because the audit goes on to say that maybe, and this is going to sources, RIL avails benefit of carry forward losses of such merged, demerged entities. So I do understand that, a lot of transactions have been red flagged, a lot of transactions have been, studied. I'll just talk about one of them, which I understand from my sources, that had been red flagged. That had to do with Reliance Universal investing 8,304 crore rupees for Reliance retail shares. So the audit shows how, these shares had been purchased, swapped, and maybe losses had been created via a web of several companies involved in this transaction. It also then goes on to say that Reliance retail shares were swapped with Reliance Fresh at a swap ratio of 5:3 to create a loss for Reliance Universe. So basically what the audit is saying, and that's what I've been told, that there is instances of circular transactions within group companies to rotate money under the garb of business transactions. This is all source-based information. This is what I have been told by my sources, that is what the audit is looking into and has red flag. There's also an issue of tax deductions. Now, it's regular feature for companies to seek tax deduction under Section 80IA. what the audit has unearthed is that Reliance Ports, there's a company called Reliance Ports and Terminals, incorrectly got a tax deduction which was not in order during assessment year 2012 to 15. Now, this company in question, Reliance Ports and Terminals, was given deduction for jetties that were to be built in an agreement with GMB, which is of course a company owned by the state of Gujarat. The audit believes that the jetties were owned by GMB, but it allowed Reliance Ports and Transport to use those jetties at a concessional rate, but that the jetties were constructed with the sole purpose for use by Reliance Industries, and therefore this tax deduction is not in order. So this is just one of the examples. I would also like to say at this point that this is just drafts, and the idea behind this entire exercise which has been carried out is not against Reliance Industries. That is not the point of why it was done. It was only done to check the efficiency of the income tax department. Are the various departments talking to each other the way they should be? Are they coordinating? If things are getting missed out in scrutiny, how efficient is our tax department when it comes to practices that are being adopted by conglomerates? And it was decided to choose the biggest of them all to see how efficient our tax department really is.
Right. I just wanted to also ask about, what is the sort of response that Reliance Industries has given you?
Yes, that's. I would like to say that we have sent a very, very detailed response to a questionnaire to Reliance Industries, and I'm going to read out their entire statement in total. I'm not going to omit even one word. So what Reliance Industries has said to me in an email is, we are not privy to CAG report on IT assessments made on Reliance Industries and its group companies, and hence not in a position to comment on its contents. RIL pays its taxes in accordance with law and is one of the highest taxpayers. RIL's accounts are audited. There can't be any difference in the recording of transactions among RIL and its group companies. If the facts stated in your query are correct, there seems to be a misunderstanding due to the lack of full details on record with the tax department. Tax relief claimed by the group are always in accordance with law and as intended by legislature. RIL never deploys any scheme to avoid tax burden. So that's the full statement that has been given to us by Reliance Industries.
Right, Nayantara, I just wanted to clarify once again that this is an exercise which has happened, and it's nothing that has come out of it so far apart from what you have reported.
That's right. I don't know what the full status of the, we've not been able to ascertain that what exactly is being done with the various findings at the moment. I am being told that the idea was to carry out this exercise to catch loopholes within the income tax department so they could be made more stringent, could be made more efficient, and that has been the entire purpose of this. And maybe whatever measures are decided could make their way into the draft CAG report for FY19.
Right, Nayantara. Thank you so much for that exclusive details and what essentially is happening as far as the audit of CAG is concerned. On that note, we are taking a break. We are coming back in 2 minutes. Don't go anywhere. Lots more lined up on the other side of this break.